Hey everyone, good morning. Abaroa for Financial Intelligence Training. It's Friday, it's August 10th, it's 2018, and we've got lots of stuff going on today affecting the world markets. Across the pond, we have the Turkish president getting ready to speak, and the Turkish lira continues its slide, and yields on the 10-year there have jumped over 93 basis points. So why are we focusing on Turkey? I mean, who cares, right? Well, the Financial Times reported this week that there is mounting concern from the ECB on the exposure held by Eurozone banks to Turkish assets. If the U.S. continues with sanctions over the held pastor that's there, the lira may slide further and the risk of foreign capital flows into the country may cease because this is real. And the capital there is desperately needed to fund that deficit. So we could see some real woes in the financials. Now, that turmoil has the world markets jittery, to say the least, this morning, and we're seeing equity futures overnight slide the most in weeks. The Euro stock slid almost 100 basis points. The FTSE was down over 50 basis points. The S&P 500 is down a half, and the MSCI, both emerging and Asia Pacific, are off over 1%. To me, this is not just jitters, but genuine concern over the banking exposure. Here in the States, I'll be watching XLF to see what type of impact that has on our financials. Now, our students, financial intelligence training students, know how important of a gauge that is to me, and the ETF has spent the last 135 days in a flat base that has been working very hard to edge its way back above that 2850 resistance. I'd like to see it hold its own right here. That would be very strong for us. Now, on the docket today, we've got CPI coming out at 8:30 Eastern this morning and a Treasury statement later on this afternoon at 2 p.m. Now, today's data is important as it may give us some forward-walking thoughts on rates and subsequent rate hikes. Now, Fed Fund futures are pricing in a September and a December hike, and I believe it's 2 more hikes next year. Now, I do have to say, I think that if the slightest bit of hiccups come our way, then we're going to see that enthusiasm for yield tempered a scotch. Now, the waters are getting choppy, and you can see that in the wacky reactions to earnings. Now, that's not to say that things are bad, it's just to say that things are choppy. Now, sometimes chop leads to bigger waves, and sometimes it leads to flat seas. Well, knowing what you're going to do in your portfolio in each environment can make the difference in how you sleep at night. Understand your 3 risk pockets. Understand what role each of them serve both independently and in chorus with one another. And if you're trading now, understand that stock and stock options does involve a substantial risk. It's not suitable for all investors. And if you like to look at charts like I do, please remember that past performance is not necessarily indicative of future results. I'm Abaroa for Financial Intelligence Training. Have a great weekend, everyone. Thanks for watching.